So the number one question on your mind right now as a trader or as an investor is probably, why the hell is the market crashing? And honestly, guys, yes, the immediate catalyst is that tax reform that Biden kind of mentioned earlier today. But after all said and done, guys, there was a ton of instances on the charts that I can point out that was leading to this crash, particularly us about 10 days ago talking about the move in Bitcoin to the downside. And I've laid out a plan how you could have actually doubled your Bitcoin. And you're probably wondering, wow, what does Bitcoin has to do with the financial markets as far as the stock market and trading stocks and stock options? And historically, I've shown you in the prior few videos how Bitcoin is always just a few steps ahead of what the market is going to do next. I've encouraged you to pay close attention to the chart of Bitcoin so you could nail the actual move in the stock market. So as you can see, the same scenario is developing now on the chart of Bitcoin as was developing in the case on the chart of Bitcoin versus the markets in December of 2017 going into January 2018. That's where the market actually hit the top in Bitcoin, and shortly within 30 days the actual stock market hit the top. And some of this stuff we're going to talk about this video is going to be extremely helpful for you if maybe you're the kind of guy that's used to making money just being a bull and buying the dip, and that a switch of the strategy is absolutely required right this moment on April 22nd, 2021. Otherwise, all the gains that you have had up to this point as a bull, they're going to evaporate way quicker than the 6 to 12 months that it has taken you to accumulate all those gains. So, with that said, again, focus on this Bitcoin chart. We hit a high of 65K. We're trading at 53K. Now, this is just the beginning. If you pay close attention to the blue line and the orange line, they will intersect here shortly. Knowing the history of Bitcoin, guys, Bitcoin will make some of its largest moves over the weekend. So it is likely that Bitcoin will be under 50K, maybe 48, 49K. Throughout the next few days. I'll pull up the calendar. So we're on the 22nd. It's the Earth Day. So the market decides to crash on the Earth Day and come back to Earth basically from the moon where it has been. And the reason I pulled up this calendar is to show you guys that we are on the 22nd. The biggest move in Bitcoin can come right here on April 24th and April 25th over the weekend. So expect a sharp move lower below some key technical levels, which ultimately will put that Bitcoin move into a range where it's going to find some support in the 45, 44 area, or it's going to drop all the way to 37, 38, where Elon Musk officially has been making an announcement where he accumulated a large stake in Bitcoin. Now, the reason it's important is for two reasons. Because one of the easiest trades that you can take in your advantage and temporarily be a bear instead of just watching. I mean, this is what's been puzzling me for the longest time for the last 20 years is why would somebody just sit there and watch the fucking market drop while you could actually be making a ton of money participating in the drop on the short side, then use the extra funds that you have made on the drop and go on your long-term positions as a bull. So that's what this video is intended to show you guys. So without any further ado, let's glance at some details. Now I want you to pay attention to this cross on the MACD as far as the chart concerned. Notice this happened just a few days ago, and I'm about to show you some of the biggest heavy players in the stock market that are about to make this cross. So although it seems like what does Bitcoin has to do with Amazon and Google and Facebook and other things, but it does. And generally this cross on the MACD and Bitcoin will precede some of the major drops in the charts of Amazon and like. So if we pull up Amazon, pay attention to the MACD. Look right here. We're just about to make the cross that Bitcoin has made already on its chart about a week ago. And also notice the similarities in the top information. I've made a video maybe about 10 days ago showing you that Bitcoin had a chance to break out higher. But if we take a glance at the weekly chart, basically I was talking about this tight trading range from where Amazon could have shot up higher and broke out to an all-time highs of 37, 38, 3,900. And it could still make a rather decent-sized move around earnings in the next couple of weeks. But at that point, if we study the behavior of some other stocks that have already reported earnings, such as Netflix, we've posted a video maybe 5 days ago sharing some information with you about some best trading strategies around earnings. And in that video, we've outlined that it was going to be very difficult for Netflix, even though the call side was so attractive right here in the 600 strike, and you could make such an easy case that Netflix was going to break out higher going this way. Indeed, what we've seen after Netflix reported earnings is the exact opposite. It is still contained within that range, but at this point, the break will imminently come to the downside in Netflix going further from here over the next couple of weeks. This type of behavior in Netflix stocks almost guarantees us that we're going to see the same type of behavior in the stock of Amazon when it reports earnings. So as you can see, very similar, same type trading range. And it's unlikely to break above that trading range because of how consistent the history has been. This could have been one of the moments where Amazon breaks out higher. But unfortunately, based off Netflix behavior after the earnings report, now we have an extra piece of evidence that Amazon is not going to break out higher and it's actually going to drop lower. With the tax announcement, it puts Amazon and Google and a lot of these great stocks in jeopardy of a definite short-term move lower. And where I'm going with this, if some heavyweight champs of the stock market like Amazon, Google, so on, if they're going to make a move lower at this point, so Google, we're basically saying Google can easily drop from here, touching the blue line over the course of the next 2 weeks, so 2,000, 2,100, easy. Couple of hundred points within the Google to the downside could take place. Okay, if all these heavyweight champs of the stock market, if all of a sudden they're making a sharp move lower, right? So Facebook, okay, Facebook is going to go lower, okay? The question is, if all of these heavyweights are going lower, and at the same time the financials are selling off, what's going to happen to the market? Well, the market is going to sell off as well. With these crazy valuations in some of these, even railroad stocks, right? There's been a lot of mergers and acquisitions. I mean, all of these stocks, which we've been highly bullish, as a matter of fact, they're staging a failed breakout. So CSX, after reporting earnings, all of them are, you know, despite of whatever numbers that are reported, I mean, the trend in all these railroad stocks been nothing but higher and higher and higher, and by the dip, that's about to reverse. So we've seen multiple sectors are topping, and these are typically resulting in what most of the market participants expect is a bullish breakout, the result in a climax point in the market where things are actually starting to move lower. And when we're noticing that it's not just one sector, right? The common story in the market has been, well, the banks are rotating money from one sector to another, such as in moments where you would see stocks like RCL, okay, making a move higher, like right here. This would be the same time where a lot of technology stocks would be moving lower at the same time. So the money is going from technology stocks into some of the reopening plays. But what has happened in the last few days here, actually just started yesterday, guys. It actually just started 48 hours ago. We had a day in the markets where basically every major sector in the S&P 500 was going lower. So it wasn't just the travel stocks versus the technology stocks where the money is rotated. For the first time in many months, like 3 or 4 months, we had a situation where we had multiple sectors. 7 out of 8 sectors in S&P were selling off at the same time. So let me help you visualize this a little bit, because this is significant. Okay, so this is significant because at this point you're getting so many multiple signals that the market is going to move substantially lower. I've posted the video saying S&P could drop to as low as 3,400 points like a few weeks back. And so at this point, this drop could materialize rather sharply because all of the catalysts are lining up at the very same time where a majority of the market participants are at the point of their ultimate most bullishness type mind frame they have ever been, ever. So you've got a situation where RCL and other sectors, they're selling off at the same time. So you have a point right here on the chart where it goes lower, and if we were to pull up, you know, for example, the Amazon chart, right, it coincides with Amazon drop. So typically there was a reversal. You see their opening stocks moving higher, you have technology stocks selling off, or vice versa. But this is the first time where multiple sectors, with the exception of one sector, guys, which is a huge indication of a huge correction or crash or drop or whatever you want to call it, and that is with the exception of healthcare sector. So healthcare sector typically goes on a substantial run-up, and it's likely to continue its run-up higher, or it's going to at least continue to outperform pretty much every other sector, as it did in the crash of September, October, November, December of 2018. So let me demonstrate that. Let me pull up this time frame right here for you in the stock market, guys, dating back to... Okay, so here's what we have. As you can see, these stocks are substantially... stocks like ISRG, if we pull up Humana, right, they are in November, they're going higher. They're dropping, but then they're going higher until ultimately pretty much everything slams dunk to the downside in December, going into that crash. But you take a look at stocks like relating to the healthcare sector, right? Until December, look at what happens here to all of these healthcare stocks. I mean, while a lot of the market, pretty much 90% of the market is selling off, this is the only sector that outperforms the rest of the market. And so in contrast, so this is CI, which is a healthcare sector, and now we're going to glance at the same time frame for Amazon. Amazon. All right, do you see that? I mean, this is exactly like the opposite, right? So they're exactly the opposite direction. So what's the lesson from this? Well, recently we've had the healthcare sector being extremely bullish, and oftentimes that is an indication that the rest of the market is about to collapse. What I mean by collapse, I'm not saying we're going to drop 50% of the market. What I am saying is going to be a rather fast but furious short-term move to the downside. And a lot of things on the chart are pointing to that are highly resembling the conditions in September, October, November, December of 2018. So if you study that particular time frame, guys, it gives you a really good foundation of what will be happening next, even though the market participants believe that April is generally a highly bullish month. So yes, you could be going through circumstances where you drop, you pop, and so anybody that buys the dip right here, they're like, oh yeah, we were right. We were right to buy the dip here, just to find themselves lose their ass on that buying the dip situation, because the market dips again, and they're buying the dip. But look, notice that dip, it never exceeds the prior bounce, and there you are. And here's the same circumstance again until it basically things just collapse. So that's when Amazon hits 1,300. Right? And so ultimately, if we were to draw this Amazon situation from 2050 all the way down to 1,300 bucks, guys, that's not a small drop by no means. I mean, that's easy 30-40% drop. That could be the instance where we could be heading into right now, with the larger part of the move taking place here, like over the next, 30 to 60 days. And a lot of it could come, as a major drop in Amazon like tomorrow. So with that said, the major part of this video I wanted to share with you started with Bitcoin, and generally we didn't have a really good stock to short when it comes to Bitcoin, but I want to show you this. I want to show you guys this chart right here. So some of the easiest underpriced trades right now, guys, they're in the cryptocurrency, because nobody believes that they can drop any substantially lower. But the fact is, in the story of Coin, which is Coinbase, we may have one of the greatest underappreciated short selling opportunities of all times, because Coin does not trade weekly options, so the only options you can buy on it, they are monthly. And guys, they are super cheap right now. Like earlier yesterday, And this morning, you could have bought 230 strike contracts in coin at like $1. And that is potentially a 50x trade. 50 times what you put in the trade, guys. So for every $1,000 you would invest in that, you could potentially get $50,000 back. So let me break the trade down for you and show you exactly how it is mathematically possible to arrive at this and what shouldn't even be as a surprise. Now, it is a surprise to you if you are highly bullish in cryptocurrencies, and there's nothing wrong with that. We're bullish on crypto too. It's just understanding when it's time to collect the gains and get the chips off the table and walk away and initiate the other side of the equation, which is profiting on the drop, so you can increase your chips overall for the next quarter. It's important to understand those moments in the market because they're truly pressures, and this is how you can increase your stakes in any type of crypto coin or coin substantially. In this particular case, you can do it on shorting Coinbase Global. And it highly resembles the situation many years ago. You're going to be shocked which stock is actually going to point chart-wise exactly what's about to happen to coin, and that is Facebook. Guys, if you look in the history of Facebook, there was a point when Facebook went public at $38 a share. Let me bring this up for you so you can actually see this. Okay, so years ago, as you can see, in 2012, Facebook goes public. What happens on the day of the IPO? Okay, let me show you. Let me help you visualize exactly what happens. Well, the stock opens in the 30s, and it moves all the way to the 40s, hitting the climax point just under 50 bucks, pretty much within the same day. Now, what happens next is something that nobody expects at that particular moment in time. It drops to $26 within a week. It bounces back to this level right here. It bounces back to this level right here, about 31, 32 bucks, and then it collapses to this level of $17 and some change right here. Now, all of it actually happens, guys, within the very brief moment, within 30 days after Facebook goes public. So if we're to measure the drop from the initial IPO reaction higher to the drop within the next 30 days, you have a huge, magnificent drop of about 60%. And this was the moment I'll remember for quite some time, because within that time frame, I was buying 2-year contracts on Facebook calls in the 50 strike, and you can clearly see that shortly after that, within that 2-year time frame, actually Facebook hits almost 100 bucks. So I was buying those 50 strike calls for 50 cents. Actually, there were 45 and 50 strike calls at the time when Facebook was hitting its lows right here. So as you can see, I'm not a 100% bear as most of the people believe. I just don't like to buy stuff when it's doing this. And that's exactly what the coin IPO just recently went through. And if it was to match what Facebook did back in 2012, then the trajectory is clear. The trajectory is right here. And actually, let me see if I can actually magnify this for you guys so you can see a little bit better on a different time frame chart right here. If we can pull this up a little closer so you can visualize this. All right, so basically this is where Facebook IPOs. This is the huge drop that follows right here to the 24, 26 area. This is the bounce that ultimately follows by a much more substantial drop to this level of 1750. Okay, so this is the trajectory that you're likely to see with Coinbase. So expect a sharp drop, which we just began that sharp drop, because if you take this stats right here, 44 bucks down to 25, I mean, that's almost half. All right, if we take a look at Coinbase, it hit a high of like 420, and now at the time I'm recording this, it's like 300 bucks. So that's a barely, 25, 30%. We still got another 15, 20% to go lower from here, which can easily put us at 250 bucks on coin. And then expect a bounce and a further drop. If we're to measure the percentages, coin stock could easily hit a low of 155. That would be an aggressive move if it was to match exactly what Facebook did back in the days. And if it wasn't to make such an aggressive move, we can easily see coin shares at like $195. $195. So between 155 and 195 is where coin could be traded in the next 60 days. With a grander part of the move that could come still right now. Right now, guys. I'm recording this on April 22nd. So between April 22nd and May 22nd, I mean, we could see coin at 250, 220. I mean, it could easily drop to 200. We already showed you our analysis of the Bitcoin chart, basically saying it could easily drop to a level of 48. And if it doesn't hold the 48, the next stop is 44. If it breaks that, we're at 38K, where Alan's been accumulating Bitcoin. So basically, we got an easy move in Bitcoin of about 30%. It would be fair to say that if Bitcoin was to move lower 30% from here, we could see an easy 30% move in coin. We can easily see a 30% move in coin. We can easily see a 30% move in coin from the level of 300 down 30%, guys. That gets you pretty much close to the damn 200 level. Okay, so the 230 strike puts are currently going for like $1, $2, guys. This is an easy move to, you know, from 230. You're going to be $30 in the money on these contracts, guys. I mean, that's a 30x. If it drops to 175, it could be at 50x. So this is a very, very easy trade. On a very, very short time frame. Based off history of Facebook, coin is positioning to do pretty much identical move. 13 market moves have been pointed to this potential move coming. We just got a highly bearish sequence that specifies this move is about to take place. Now, with all the stuff I've shared you guys, Bitcoin, to summarize this, Bitcoin typically fronts run the market and showing you what the next move in the stock market and major stocks is going to be. If you understand that, you can get ahead of the move in the market and you can benefit from the market drop substantially. When the market nails the bottom, just as the bottom will always come as it did with Facebook shares, at $17.50 roughly back then. So it can happen again now with the shares of Coinbase. So a level of about 155, 175, 195, that would be a level at which you want to come in and initiate a long-term position on coin. But you definitely don't want to do it now, because if you keep buying the dip on coin right now, despite of all the analysts, at this point we had 3 analysts come out and say coin to 385, coin to 420, and it's not reacting healthy to these analysts' upgrades. In other words, we're seeing exactly the opposite, what I would call a divergence in the behavior of the stock. An easy example would be Tesla shares. Every time analysts upgraded it over the course of the last year, with the exception of the last 3 months when we've been highly bearish on Tesla, every time the analysts upgraded Tesla, what happened? It went exponentially higher. In this case, with coin, you have exact opposite characteristic. Every time analysts upgrade it, what do you have? Coin moves lower. On what appears to be a highly positive catalyst and a hot stock, and it's making the opposite move. So when you combine all these signs, guys, this is an easy trade anybody can take. If you still don't understand how to put this trade on, maybe they're new to the markets, maybe you made a bunch of money on being a bull in the markets, but you don't understand how to make money by shorting the market. That is how to profit when things drop, when Bitcoin drops, when market drops, when Amazon drops. If you don't understand how to exponentially increase your trading account by betting against the market short term, it can definitely increase your positions, your long-term positions, and it can definitely position you to buy the market at the right time for your longer-term holdings. So if you'd like to learn how to do that, guys, make sure you click the link below this video, schedule a 20-minute coaching call so you would know exactly, like literally, what strike, what expiration, when do you want to actually pull the trigger. You want to do this now so you wouldn't miss out on this killer home run opportunities in many stocks and many sectors, guys. So let's roll. I'll catch you on the next video soon, guys. Make it happen.